FTSE 100 plunges 108 points as £27 billion wiped off London index. The FTSE 100 has closed down 108.45 points to 7,334.98, as traders priced in the prospect of tighter monetary policy in the US, Europe and Asia. More than £27 billion has been wiped off the value of London's top flight index as a sell-off ripped through global markets, culminating with a huge slump in the Dow Jones. The FTSE 100 lost 1.4% as it fell to its lowest level in around 2 months. This session was the fifth consecutive day of losses for the index, its longest losing streak since November, in a broad-based sell-off where only a handful of stocks were trading in positive territory. White House says it's concerned as Dow Jones plunges more than 1,175 points. Neil Wilson, analyst at ETX Capital in London, equity nervousness seems to be about repricing for higher yields and tighter Fed policy and the fear that the bond market has broken out of its three-decade bull market. Consumer staple stocks were the biggest weight on the FTSE, taking a combined 27 points or more off the blue chip index. Among the few stocks which ended the day in positive territory were miners Antofagasta, Glencore and Anglo American, up 1.6%, 1.1% and 0.3% respectively as the sector found support in a rebound in metal prices. Rand Gold posted the worst performance of the index after it reported 2017 profits and said it would participate in a campaign to overturn a new mining code in Democratic Republic of Congo. An outperformer was Kingfisher, which rose 2.3% to the top of the FTSE. Traders said the stock was supported by hopes for an easing of competition after rival Wesfarmers wrote off British hardware chain Homebase for more than its purchase price, saying it had made a series of mistakes. Tesco fell 1.7%. Britain's biggest retailer said profit for the full 2017-18 year would be slightly ahead of analysts' expectations and confirmed it would pay a final dividend. It also said Booker boss Charles Wilson would stay on and run its entire UK business once it completes the £3.7 billion takeover of the wholesaler. Ryanair fell 1.7%. The airline posted a 12% rise in fourth quarter profit but warned of possible further disruption by pilots and said it was not optimistic about average fares in European short-haul in the summer. Across Europe, Germany's DAX was down 0.8% and the CAC 40 in France dropped 1.5%. US markets were also coming under pressure, with the Dow Jones Industrial Average and the S&P 500 slipping 0.7% and 0.5% respectively at the time of the London market close. At the close of trading at 4 p.m. EST, 9 p.m. GMT, today, the Dow had plummeted more than 1,175 points to 24,345.75. The sell-off came as investors continued to worry about rising interest rates and the removal of central bank support. After initially plunging 214 in early trading, the White House voiced its concern over the slump. In a statement to CNBC, a White House official said, "We're always concerned when the market loses any value, but we're also confident in the economy's fundamentals." The S&P 500 opened down 0.94% and the Nasdaq Composite fell just over 1%.